This is the hybrid training. It is a much needed training because we did update the software and a lot of people that really don't know how to use it. So this is actually going to be a manual as well. Now, risk disclaimer, Unit Prosperity is not a financial advisor, nor does it give out financial advice. This video or training is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All hypothetical examples are for the purposes of teaching principles and are not intended to suggest future results. The customer of Unit Prosperity products and/or services assume full risk and responsibility for their trading activity. Forex and options are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Past performance is not indicative to future results. Individual results will vary due to a variety of market and time conditions. You can read our full risk disclosure on our website at unitofprosperity.com. Now, important things to remember. I'm going to do this every time I train. I have to go over this because we have new people joining every single day right now. So I want to make sure everybody knows what's going on and how to proceed going forward. Now, you want to make sure that you go through the entire academy if you plan to learn how to trade, because if you're going to be using our software, it's not going to make sense to you if you have not went through the academy. You're not going to understand what hidden divergence is, or divergence, for example, or supply and demand, or support and resistance. If you have not went through the academy, you're not going to understand how to get the best or the most out of the software. I know some people come here just for software, and I'm not talking about the trading robots, because that's something completely different, but they come here for other software and they don't really have a clue what a pip is or how to count a pip. You're ultimately setting yourself up for failure long term, and we don't believe in that. Okay, we want to position you for success the best way we possibly can, which is why we created the tools in the first place. But before you start using them, in order for you to maximize your potential with them, go through the academy entirely. I don't care if you come from another Forex company or another Forex program. In most cases, what I've learned is you're going to have to unlearn to learn, because you probably were taught wrong in the first place. Okay. So whatever you think you know, just go through it again and learn how we do things here. Plug into our weekly trainings. We do these 2 to 3 times a week. It all depends on the week. Explore the webinar replay section. Focus on 1 to 2 pairs weekly until you master them before adding any more. So this is for people that are trading manually. So if you are trading manually, do not try to trade everything because you're only going to delay your learning process. Now, this is outside of any trade idea that is sent out. So if you're doing your own personal training outside of trade ideas or signals, whatever you want to call them, that are sent out, only focus on 1 to 2 pairs. Because again, if you try to do more than that, you will delay your learning process. All right. Pick one strategy, master it before trying to learn something else. We have a variety of different methods that you can trade, which is the beauty about this company. We just don't teach you one thing. I think it's great to know more than one thing, because not all strategies work in all market conditions. All right. So that's why we believe in equipping our traders and our students to be well-rounded, to learn and know how to trade in all market conditions. So pick one strategy, master it, whether it be hybrid, for example. Some people just come here and use hybrid and make a lot of money using hybrid. If that's all you want to do forever, by all means, do that forever. Okay. You don't necessarily have to learn about everything else that we have, or even use everything else that we have, even though it looks sexy, even though it looks attractive. You don't have to use it all. If you just want to use hybrid, which is one of the reasons why we created that, then use it. It is a 6-figure potential system. So you can literally, if you master it, you have the potential to earn a 6-figure income just by trading hybrid if you are consistent with it and you master it. Use our trading system. I just talked about hybrid. It is for beginners. So if you don't really know a whole lot about trading, You don't really have to. You just have to know how to follow rules and follow instructions. If you can do that, you can create pips and increase your account. Okay, that's all you have to be able to do. Remember, we use TradingView to chart and MT4 to execute trades. Your charts will vary from mine or anyone else's, so don't try to compare. Use risk management, very important. Risk management will keep you around for the long haul. Don't feel pressure to do what everybody else is doing, okay? Do what works for you and scale. Like I said, some people just trade hybrid. That's all they do. Some people like to trade supply and demand. That's all they do. Some people like to trade divergence. That's all they do. So we're going to teach you a variety of different things, and you will figure out what you gravitate to the most and what you will want to do at that point once you figure out what type of trader you are, okay? Though we trade on a variety of different strategies, that doesn't mean you need to go and try to implement them immediately. I think I've mentioned this earlier, but especially if you're new, do what works for you and your personality. That is very, very important, okay? Do what works for you. Don't DM me, use support for critical issues. If it's something critical, send a support ticket. Do not DM me, okay? Because again, I have a lot of responsibilities and there's no way I can sit and answer everybody's direct messages all day and run a company at the same time. It's just not going to work like that. But these are the new settings for the hybrid. A lot of people don't know what these are for, so I'm going to explain to you what each thing is so that you all have better clarity and so that you can understand the power of this tool. So the smooth band filter is the huge centerpiece, or basically the EMA that's on the screen on the middle of the chart that turns red and blue, and it's based on trend direction. So if it's red, that means you are in a bearish trend. If it's blue, you are in a bullish trend, and obviously the candles will be above that. The major swing filter uses the swings of the selected time frame to determine the swing direction, okay, or the trend direction. So an example of that would be if price is creating higher highs or lower lows, and you see I have them highlighted here, okay? So typically by default it's on no, and you have the next field which is applicable for that if you make it yes. But you can decide if you want to have that on. Now, going back to this really quick, the smooth band filter, all right, for example, if you are on a 5-minute chart, all right, you don't want to have the smooth band filter on the current unless you're scalping, okay? Typically, what I will do with that, you know, I like to have my smooth band filter, for example, if I'm trading off the 5-minute, for example, I will have it on the 15-minute because I like to follow the trend of the higher time frame. All right, the overall time frame in that way. That's how I like to do it. Okay, but most people leave it on current and do well. But I like to have mine set to follow the trend of the higher time frame because again, that's kind of like pretend that's a moving average. So if you're scalping on the 5-minute or the 15-minute, I want to follow the trend of the 1 hour time frame, and I'm going to make sure that moving average is set on that particular time frame. The major swing filter, same thing, higher highs, lower lows. I like to go a time up from what I'm actually trading off of. But again, you can kind of practice and play with it to see which settings give you the best results, okay? The main signal requires a Heikin-Ashi close above the upper or lower band together with a qualifying MACD signal, okay? So basically, all it is the candle crossing over the smoothing band, okay, EMA, with the MACD crossing over at the same time. That's all it is, okay? The second variation is also the main signal, which will enter reasonably near the lower upper band on a trend movement after closing above below together with a qualifying MACD signal, which I will show you later on. All right, trend line break signal. Basically what this means is software will show yellow dots when the trend lines are broken within that current wave. So if you are in an up wave or a down wave, it will show a yellow dot, and you have the option to draw lines as well, which I meant to delete that slide. But you can draw lines as well if you wanted to do that, or you can just show the yellow dot. It's totally up to you. If it draws lines for you, the lines are not necessarily always perfect when it draw. For whatever reason, we couldn't code it to draw the lines properly. So sometime, some people like it off. They just like to see the yellow dot and draw their own lines. But whatever the case is, that's what that means. Send alerts. Good grief, I didn't change that. But send alerts, these are different alert options that you set when the software generates a potential trade setup based on the parameters that you set. So if you wanted to send alerts for you, then first of all, you need to make sure you have send alerts set to yes. Then you decide which alerts you want to get, whether you want a pop-up alert, email alert, or a mobile alert. Now, if you don't know how to set up alerts, if you go to the software and tools section on the website, right there at the top of the page, there's a video that shows you how to set up alerts. Alert bars are the amount of bars from the signal that a alert will be sent. I like to have mine set to 1. So as soon as the signal appears, boom, I'm getting the signal right away, and I'm only getting it once. Okay. Now, if you put it to like 5, for example, it's gonna keep sending the signals up until five candles after the signal actually happened, until it won't stop, until it won't send signals anymore. Okay, so you're gonna have 5 candles. If you put 5 in there, 5 candles, every candle up until it reach 5, you're gonna get an alert on your phone or on your computer. It would just keep going off. All right, I just like mine on 1. I don't like my phone beeping off redundantly for MT4 or my computer. But that's basically what that means. Maximum bar history. This is the amount of candlesticks you want to display on your chart. So this larger amount is only useful for back testing purposes. So if you want to back test and kind of go back in time to kind of see how the software performed in history, then 10,000 bars is fine. If you're not going to do that, you can set it to 500. That's enough. Typically, that's what I set mine to, is 500. Unless I'm back testing. Reset chart colors is set to yes by default, and it will change your entire theme on your chart, and it will use the indicator theme. If you set it to no, it won't change the theme of your chart. So if you already have your candlestick colors a different color, for example, and you have other indicators on your charts, then you want to make sure you have this set to no, because if not, I believe it removes them, and just put this indicator on there. Okay, it will override everything that you have on your chart if it's set to yes. Show Heikin-Ashi candles. We made this option available because some people don't like Heikin-Ashi. I like Heikin-Ashi with this trading system because price movement is smoother with the Heikin-Ashi candles. However, if you wanted to switch back and forth, you can switch it to no, and it would show regular candlesticks. Okay, that's 100% totally up to you. Now, here's a sell example. All right, now this is what I wanted you guys, for the people that don't understand what I'm talking about. All right, now if you look to the left and you see that white dot to the left where it says wave down, only take sell signals. Do everybody see that? All right, so right here, this is your sell signal. Okay, all right, so whenever you get a white dot, you're trading from dot to dot. Those are waves, okay? That is the Elliott wave indicator that's built inside of this. So in this case, in this sell example, this white dot is telling me that a wave down is coming, okay? But I am not going to take a sell immediately, and I am only going to take sell signals until the direction changes, okay, or the wave changes. So I'm going to ignore all buy signals in this downward wave, okay? Does everybody understand that? You're ignoring all buy signals in this situation, all right? So you're going to ignore all buy signals. So this is what I'm talking about. This blue and red line here, this is the smoothed band, okay? Now, where I have circle here, all right, you got an arrow and you have your MACD crossover as well. That is a sell signal, okay? When you get the crossover, that is an indicator for you to potentially get in. Now, if you would have got in right here, price went down, but it came back up to retest. All right, so you would have had a little bit drawdown, and some of you all probably would have gotten out of the trade at that point. Okay, but you got to remember, this right here is still telling you that price is going down. So I'm going to stay with it. I'm going to have my stop loss probably at that high right here. Okay, and I'm going to ride it all the way down to this point. Now, here's a key point that I want you to really pay attention to. Number one, everybody see the arrow is telling me to sell, but you're only paying attention to sell signals. But you also have a yellow dot, which is telling you to buy. You're going to ignore that because it's telling you to buy in a downward wave. Okay. Now, when price correct, like in this example here, this is a price correction. Price came down and it's starting to correct. You got blue candles. When you got blue candles, and when you have blue candles, sorry guys, I'm from Alabama, so pardon the grammar. But when you have blue candles in a downward trend, you got a red smoothing band telling you price is going down. You're in a downtrend. The candlesticks are below that smoothing band. Okay. But you got blue candles. That's an indicator that you're probably in a correction. So in that case, you see that I drew a green line there. And the only thing that you're waiting for is for price to break that green line or break that trend line before you enter again. So you don't necessarily have to always wait for a signal from the hybrid, because it's not going to give you a signal on every single last correction. All right. You can do some of this on your own because it's pretty simple once you understand what I'm teaching you right now. So once you see that it's starting to correct and you start getting blue candles, just take your trend line, draw it from here to here. All right. And wait for price to break if you're still in a downtrend. Okay. In this case. And once it breaks that trend line, enter again and set your stop loss above the previous high. And notice as well, notice how price is still hanging out below the zero line. Okay, that's an indicator you're still in a strong downtrend. All right, then you got price coming down again. It's moving sideways. All right, and then you see right here, you got a trend line break sell signal. That's what the yellow dot is. So you're only going to pay attention to what? What are you only paying attention to in this case? Sell signals. All right, sell signals. Okay, so that is a sell signal. Plus you got an arrow. Plus you got another crossover here at the same time. And it drew a trend line for you right here as well. And then look how many pips that dropped down. Okay. All right, you caught that. And price is still floating below the smoothed band filter and it's still red. Okay. Then you notice that price starts to correct again. You got blue candles. So I would just take a trend line like this green line, draw it. Even though hybrid does not produce a signal here. Okay. You can have enough common knowledge to know, hey, once price start moving in the opposite direction of the trend, in this case, all right, which this is a correction, I'm just going to draw a trend line and wait for price to break that trend line again. Does everybody knows what qualifies as a proper trend line? 2 touches. Okay, 2 or more touches. All right, absolutely. Okay, so you have the break, it dropped again. Draw another trend line, it broke again, draw another trend line, broke again, and then boom, there's your white dot. Okay. Once you see that white dot appear, then at that point, you're kind of leery about, what price is going to do at that point, and you're just going to wait for price to cross over before you start taking buys. Now, what gets people is when the white dot appears, a lot of people get impatient and they want to get in immediately, and they don't want to wait for price to actually confirm that you're in a uptrend at that point. Okay. Because even though price is here, if you understand what Elliott wave is, okay, which Elliott wave is too complex for me to even try to explain right now. But long story short, you know, you can have waves that will extend. And some people may say, well, it's repainting or whatever. This is the only indicator that we have that actually does that. All right. Anything that has Elliott wave built into it, you're going to have certain waves that extend. And that's not repainting. That's just a wave extension. Okay. There's a difference between repainting and a wave extension. So that's why it's important that once you see the white dot appears, you don't trade the white dot. You wait to see if that wave is going to extend or not. If it doesn't extend, then you're pretty solid. You're just waiting for other confirmation for price to cross over before you start taking buys. Okay. Next example. All right. Right here. All right. You got a white dot below the candle, not above. So if the white dot is below the candle, what are we going to do in that case? All right. You're going to buy. That's correct. Okay. Now, don't pay attention to this right here, because this right here really don't even matter in this example, because I wasn't really even using this, because this is all in history. It's not real time, so it's not going to show proper anyway. Okay. So, but the white dot below is an indicator to buy. So all I'm doing now is just waiting for other confirmation. So confirmation one, I got my arrow because price is crossing over the smoothing band. Second confirmation is the signal line, the blue signal line is above the red and it's crossing over the zero line on the Hybird MACD. So I am going to buy at that point as soon as that happens. Okay. You will set your stop loss below the previous low and you will ride it up. Okay. Now, once price goes up, you got a little correction to come down to retest. Okay. It's retesting. So if you're like, man, I'm going to get out the trade, if you can't hold it, because some people don't know how to hold trades. All right. But if price still is below, I mean, as long as price doesn't go and hit your stop loss, try to stay in, especially if it's a tight stop loss. Okay. But this green line right here is me drawing my own manual trend lines. Okay. Don't be afraid to draw your own manual trend lines if you are within the same wave that the Elliott wave is telling you the price is going. Okay. So I drew my trend line, got back in again, boom, price came up, draw another trend line here, price came up a little bit, draw another trend line there, and then price just took off. Draw another trend line, price took off again, did a little baby correction, took off again. Then right here, in this area right here, the software generated a trend line break buy signal in a buy wave. So when that happens, guess what you're going to do? You're definitely going to buy there. Then you have price came back down again. Okay. We're only buying. It came back down again. It went a little lower than your entry. Okay. So you're probably afraid, maybe, if you got out the trade. But if you understand where you are and you're still in the same wave, you're not panicking. You know price is going to go up eventually. And then look what happened. It took off. And then you got this right here that popped up. Okay. Sell example, another sell example. All right. We're only going to sell because the white dot is above the candle and it's telling you to sell. Now, granted, if you get a little bit more experience, you probably could have took an earlier entry, but most people are new. So we're not going to do that. We're just going to wait until price come to us. So granted, you probably missed a lot of pips right here. All right. But you want to be sure that you are getting into a proper trade. So you have a trend line here and you can say you're counter trend trading, but you're not going to do that. You're only going to sell because the wave is telling you to sell, even though you missed pips right here. All right. But would you rather have this right here or would you rather have that right there? Number one or number two? All right. Yeah. So number two makes the most sense. Okay. So you're waiting. So if you draw the fib right here, that is a 618. I can guarantee you that is a 618. I can look at it and tell. All right. So price came down. It came back up. All right. Did a 618 retracement. And then boom, it took off. You get into the trade right here where the sell signal is. Okay. That's your confirmation. Really, if you know about Fibonacci, you can enter right there. But most people don't. Okay. So if you want it to be safe, you can wait until price cross over. You got price also crossing over down here on the 0 line, and boom, you are in a bearish trend at that point, and you got a few hundred pips, okay, or 100 something pips right here. You have a little correction in this downtrend. Notice that price, and some people may ask, well, how do I know I'm still in the downtrend? Number one, the wave hasn't changed direction yet, okay? And if you look at this correction here, you see it's correcting, okay? And this high hasn't exceeded this high. That's number one. Number two, this is still kind of floating below here, even though it came up a little bit and crossed back over. So I'm going to draw that trend line just like that. When I see price correcting, if it's going to take off and exceed that high there, then I know the trend direction probably changed. But if it doesn't, okay, I'm just going to wait for price to break that trend line again before I take another entry. And then boom, you caught a little nice little gain right there before the Elliott wave dot pops up in that example, okay? Final point is wave up, take buy signals only in this example, okay? Now you're gonna wait until price comes to you. So you gotta push up, you got another M pattern, you gotta push down, it came back down again to kind of retest. And this right here is where a lot of people get impatient. Okay, you just have to wait until price comes to you. Then the price finally takes off, it's starting to come up, and then it crosses over the smoothing band, EMA. Okay, the arrow appears, and then you have a crossover on the 0 line as well, which if it's these lines are floating above this, that means that you are bullish. Okay, then at that point, as price push up and then it comes back down, okay, to retest the smoothing band, guess what I'm doing? I'm drawing my own manual trend lines, and every time it breaks, I'm trading it. It corrects again. I draw my own line, and it comes up again. I draw my own line, comes up again, draw my own trend line, breaks, come up again until I see the next white dot, and then I'm out. Okay? Now, hybrid is a very powerful system. Sometimes it requires patience and waiting on the right setups. If you practice this along with risk management, you could potentially experience great results.